Hello, welcome back, guys. It is a semiconductors day today, obviously, after the US came up with a ban towards China and semiconductors from Nvidia, AMD, and all the other semiconductor companies that are doing business with China. We're going to be examining what happened in detail and actually talk about AMD in this video and how it gets affected by this pretty much ruling from the US. Now, we will talk a little bit about the business that is happening with China. For instance, Nvidia. It's a small part of their overall business, what they are losing there in China. It's still important, but it's nowhere near as big as some people would think. And I'm going to talk about it in a little bit more detail in this video, of course. Now, if you're new around, please remember to leave a like if you enjoy this kind of videos, and also subscribe if you are new to the channel completely, if you haven't watched any videos before, because we're going to be talking about a lot more stocks and especially semiconductors for the day at least. Okay, so AMD here, what is going on with AMD? If we take a look at the news first, AMD says US told it to stop shipping top artificial intelligence chip to China. And you will see here that today, basically, US officials have told it to stop exporting its top artificial intelligence chip to China. The company said the new license requirements prevent shipment of its chips to China. Okay, so AMD shares have been down 2%, now they are more than 2%, like 3.5 or so. After arrival, Nvidia said the new rules could cost it up to 400 million in sales. And this is the article that I pretty much analyzed in the previous video about Nvidia. Again, I'm not going to go into much detail. You can watch the Nvidia video if you're interested. But the point is that chip maker Nvidia in this case won't be able to actually ship its chips to China pretty much. It won't be able to continue making business with them. And they made about 400 million last quarter is what the article is pointing out, which is important to see here. Now, of course, we can use our tool here and go back to Nvidia. I can actually type Nvidia and go back to Nvidia financials here. And you will see, if we take a look at the financial statements of Nvidia, you will see that last year they made a revenue of 26.9 billion here. And so that means that in China, last quarter, they actually made about 400 million, which would mean that for the year they are going to be making maybe 1.6 to 2 billion usually, like normally. And we can use quickly use a calculator to see how much that is of their overall revenue here. So let's do that quickly here. And so what we can quickly do, let's just say it's 2 billion that they're going to be making from China. They would have been making from China next year. And so we can do like 2 billion divided by 27, which is the total revenue. And that would be about 7.4% if we multiply by 100, of course. About 7.4% of the revenue comes from China, pretty much. It's actually a little bit less probably for the year over here. It's probably around 1.6 billion. So maybe 5.5%, 6%, something of that sort. But the point is that it's just a small part of their revenue here. Will it hurt? Yeah, it will hurt a little bit. But it's not the end of, the end of the days, frankly. Now, the problem is there is also the opportunity risk problem, because they will be losing some growth from China as well, not be able to do business with them. So that's a thing that will definitely hurt them too. And yeah, this is definitely not good news. But with this kind of news, there can come some good opportunity, some important opportunities here for buying these kinds of companies for cheap, especially as they are going down right now. And this is why I'm making these videos, and this is why I think they are super interesting to watch over here. So we're gonna go into more detail about AMD here and see whether this company, after this kind of declines here, makes any sense to be adding to a portfolio right now, or potentially in the near future, really. Now, we can see from the chart here from AMD that the stock has been enjoying some great upticks over here for a long time, and then kind of came down with the overall market about 50%. So it has been dropping quite significantly lately, but still pretty much crashing it over the last few years. Again, if you take a look at the last 5 years, for example, amazing growth for this company here, absolutely amazing. Now, the thing is, the company has been expensive. Their P ratio and price to free cash flow has been rather high. And you can take a look at the chart here. At some point, it was even negative, but it was like near 150 or so over here. And the price to free cash flow, likewise, it was following the same trend. And you don't really want to be buying companies that high in terms of the valuations, because then you are overpaying. But the thing is, as they are coming down in price, and especially right now, we're looking at about $81, it looks like, when the market opens today, then we may be getting a nice opportunity. And this is what we need to be examining. Now, the board, you will see here, has taken full advantage of the stock price, because when you are looking at the board, they are salivating at these prices over here. When the stock was going higher and higher, they were salivating because they knew it was expensive, and so they kept feeding investors with new shares. So they kept issuing shares and funding themselves, because this way they are getting cheap funds. They are getting money basically from shareholders, instead of having to get debt, instead of having to borrow money. And so this is bad for investors, is the problem, because then you get diluted. And so if you bought over here, right in 2017, you have been 70% diluted of your stock. Now there is 70% more stock than what it used to be. And so this means that your stock is worth less, at least intrinsically, because worth less or worth more is always a subjective term in the markets, because it has a lot to do with sentiment, a lot to do with the current market condition. But the fact remains, you have been diluted if you bought back in 2017, and pretty massively. Now the company, and that's the great thing about this company, has been growing tremendously. You will see it here. Net income that has been pretty much booming, skyrocketing, but it started near zero. And free cash flow, same thing, and total equity, of course, with all the stock being issued and the money that they are making, to be fair, it has been going up and up. So things are looking nice here. And also the company doesn't have a lot of debt. You will see that last year's free cash flow is enough to pay almost 1.5 years of last year's free cash flow, pretty much, is enough to pay back all the total liabilities that they have. So very, very solvent company, not having a lot of debt, is what we're seeing here in our tool. Great to see from the company. Very little debt to equity ratio, very low. And margins that are fair, about 15%, they are going down. They used to be a little bit better. Kind of expected to go down at least for a little while over here. Now the thing is, we can take a little bit of a closer look at the income statement, balance sheet and cash flow statement, and you will see that the company has been growing their revenue here pretty nicely, tripling it in fact, and net income from losing money to making money. And this is the best thing that you want to be seeing out of a company that is actually losing money, going to marginal profitability and then actually booming. Fantastic things over here for AMD. Good stuff. In terms of their balance sheet, you will see what I mentioned earlier. The total liabilities of the company, they are sitting at about 5 billion over here, as you'll see. And if we take a quick glance at the cash flow statement, you will see that the company made 3.2 in terms of free cash flow last year, which means that it's about 1.5 years of free cash flow, of this year's free cash flow, to pay back all the total liabilities that the company has. And of course, the free cash flow has been growing nicely over the years and booming pretty much in the last year. Hopefully they can continue at the same pace, is the thing that we, of course, will be seeing in the upcoming quarters or so. So, going back to the balance sheet, we can kind of also take a little bit of a look at the total equity, which has been growing. But remember, there is always the catch of additional paid-in capital. The company has been issuing stock like crazy, like madmen. And so that's not great, because, again, insane dilution going on. Okay, so the next thing that we want to be taking a look at is, of course, the price. Because the company looks great. It's going down in price right now. It may go down even more. It's not really the time to buy these days, I believe. I kind of want to wait for the dust to settle. But when the dust settles, are we near a buy time? Is it a good buying opportunity? And we do know that the revenue of the company, the revenue growth of the company, will not be near 33%, which is the average that AMD has been doing in the past 5 years. This is not going to be sustainable for the upcoming 5 years. We're looking at lower values, and we kind of know that already, potentially from analyst estimates and what the company is saying, actually. And so we're going to go at 8, 10, and 12 here for much more possible revenue growth numbers here for our projections, is what we're going to be projecting here in our model. And the net income margin that we're going to be going for, remember, it has been suppressed lately for the company. And the last couple of years, 25, 19, and it's been going down actually even more lately, as we noticed earlier. in our metrics page is the most current numbers pretty much, and we will go probably somewhere in between the 19 and 14 15 range. So I'm gonna go 14, 16 and 18 over here. And the free cash flow margin, typically the company makes 80 to 100, as you'll see here. Some years where they have been not great for the company, we're gonna have the odd one out there, but overall they are doing probably something like 80, 90 and 100. Annual return of about 13%, what I typically like to be making. That's the return that I want to be making out of my investment here, is what I'm asking, 13% a year. And if I hit calculate, you will see that we're about probably maybe double where we would like it to be. So the current price is sitting at about 80. Remember, it's going down today. And we want it to be maybe in between these levels here. Again, I'm probably fine paying about maybe 35 to 40 bucks here, going through to my medium and high ranges, because the company is a very solid company that's still been growing very nicely and has a lot of growing to do. Actually, has been getting a very, very big actually pie from the chart, pretty much the market. And so I would definitely be willing to pay probably even the high range here, maybe 40 bucks. Would make a ton of sense for this kind of company. That would mean that I'm paying for a potential 12% revenue growth for the next 5 years, 18% margin, and the same free cash flow margin, 18%. It is 100 because 100 means 100% of this margin, pretty much. Remember, we are doing that because we want to be examining the free cash flow compared to the net income that the company generates, free cash flow from profitability. And so this means 100% of the net income margin, which is 18% of the revenue. Is exactly what it is. And yeah, so I think this is a company that is still expensive, yet becoming more interesting. So I do want these semiconductors to keep falling, to keep going down, and if they crash a little bit more, then I would definitely be looking to get some of the action here for sure. So if this goes much lower than it is right now, I would definitely want to be holding some AMD here. So what do you think about AMD? Tell me with a comment below. I'd love to hear your thoughts. And I hope you enjoyed the video. Again, remember to leave a like if you did. And I'll see you in the next one. Meantime, I'm actually linking the video that I made earlier about Nvidia, in case you are interested to watch this one as well. And I'll see you in the next one. Probably today, probably for another semiconductors company, probably for Intel, for example. We'll see. But more than likely, it's going to be another video at least for Intel today. Thanks for watching again. I'll see you soon, guys. Bye-bye.